Welcome to Everything Money. In this video, you will learn how to analyze Alibaba as a company. We will use our exclusive software to show you the fundamentals and the financials behind this amazing company. We will transfer these fundamentals into a stock price. And if you stay tuned, you will learn what to pay for Alibaba using our stock analyzer tool. If you love trading stocks at a quicker pace, you can join Mo. Mo will show us the charts on how to trade Alibaba. But first, who are we? I bring your normal person questions to a couple wealthy guys who maintain and manage about $100 million in businesses, real estate, and stocks. I'm learning from them, and you can too. Right now, Alibaba, Paul, has been an incredible company this year, from its heights to its lows. We went from totally against this company to absolutely loving it. And so I introduce you to Paul and Mo. Welcome in, Paul Gabriel.
All right, guys. So first off, follow us on Instagram. We have a new Everything Money account. And please follow us personally. It helps our egos out, makes our moms proud of us.
Very much so.
So this is the exclusive Everything Money software, which you'll learn about in a little bit. We click the 8 Pillars tab. We type in Alibaba.
You can have the software in the palm of your hand with our Everything Money app, Paul. Keep going.
Yes. So Baba is B-A-B-A. We go to it.
NAS.
So guys, Alibaba is a $460 billion company.
Nice.
But check this out.
60.
The stock is 170, and I want to make note of something. I own a lot. It's my largest holding. If you'd ask me right now what's the stock price, I'd have no clue. Last night, I was talking to two friends. Paul, you see Alibaba lately? No.
Me neither.
That's
Paul.
what I want to teach. You buy a good company, you put it away, you don't care about it, you just list it there and buy a good company, hold on to it.
Many months ago, when this stock was $360, we did a video. People told us $320. Yep. People told us we were nuts. We said it was overpriced. Then when it fell all the way down to $139, Paul, you were scared that was going to be the bottom trough of this company.
I was worried that it wasn't going to go lower. I wanted it to go lower.
Right.
That's different.
And we'll teach you this mindset about buying a stock at 200 and 170 and being happy when it's at 130. Keep going, Paul.
Okay, so our first metric of our 8-pillar portfolio software is 5-year PE. We want it less than 22.5. It's 27.7. That's an X. But folks, don't be worried. Don't just look at that PE and think, oh my God, it's a fast-growing company. You should pay a higher premium for fast-growing companies. So don't worry about that quite yet. Pillar number 2. We want their 5-year return on invested capital being larger than 9%. So your next question might be, what the heck does that mean? A company grows by using their own capital, by using their own equity, or by issuing debt and using the debt. This tells us the return they're getting on those two areas. It's 10%. We want it more than 9%. That's a check mark. So it means they're doing a good job of making money on the capital invested in the business. We like that a lot. So far, 1X and 1 check. Pillar number 3, we click on the income statement right there at the top. We want revenue growth over the last 5 years. 5 years ago, they did 27.58, 120.34. Check mark there. Pillar number 4.
Profit growth.
We want profit growth over the last 5 years. We scroll right here to the bottom. 7.95 billion to 23 billion. Yep. Check mark there. Fast growing company. I'm not as worried about PE, guys. And the stock analyzer tool at the end, when you see the value we come up with for the company and what you should pay for it, it'll factor in the revenue growth so you don't have to worry about that PE. Pillar number 5. Now, Seth, this is one of the biggest pillars. I'd say it's almost like, I feel like I'm like a vigilante here, trying to go out there and teach the world about this. We look at shares outstanding. Guys, you don't want a company who's issuing tons of shares because they're hurting you, they're diluting you as a shareholder. What does that mean? If there are 10 shares outstanding of a company, you own 1. If they decide to issue more shares to fund growth and they go to 15 shares, you still own 1 share, but now it's out of 15 shares instead of 10. You went from 10% ownership to 6.6% ownership. They are diluting you. The reverse happens when they're buying back shares. If they go from 10 shares to 8, you went from 1 out of 10 shares, which is 10%, to 1 out of 8 shares, which is 12.5%. So this is very important. So go to the bottom. 2.54 to 2.72. That is an X. But it's not a big X. There are some companies out there like Tesla who've increased the number of shares by double in the last 10 years, not including a split. So this is an X, but it doesn't worry me as much. Now, pillar number 6.
Yeah, this involves their debt, folks. We want to make sure they can survive if something terrible happens. And it's a little confusing. Paul, tell us about pillar number 6.
So debt's very simple to understand. The more debt you have, the more likely you are to go out of business. So it's about staying in the game. So what I decided to do was, after doing a lot of research, I go back to the main page of our exclusive Everything Money software. I go to the metrics right here. I look at the 5-year average free cash flow, $18 billion. I multiply it by 5, $90 billion. Now, guys, one thing I want to make note, this is all recapped in another tab, which we'll get to, so you don't have to do all this math yourself. Our exclusive software will do it all for you. We want their total long-term liabilities to be under $90 billion, right? So we go to the balance sheet tab. We scroll to the bottom. It's $37 billion.
Wow.
They can pay off all their long-term liabilities in a little over 2 years. In fact, last year they did $33 billion. They could pay it off in almost a little over 1 year. The point is, this company doesn't have a lot of debt. This is a big check. Pillar number 7, the big mamma jamma stuff.
This is free cash flow growth over the past 5 years. I assume it's skyrocketing, Paul, wouldn't you?
So free cash flow is cash from operations less your capital expenditures. And companies use this money to buy back shares, pay out dividends, which Alibaba does 0 dividends, make acquisitions, and pay down debt. So cash from operations less your capital expenditures. Our exclusive Everything Money software has this extra line added here. It's the only software that has it right here. It shows all, because this is not a line in actual financial statement. $10.2 billion in free cash flow 5 years ago, 29.5 last year. That's a check mark. Our final metric, we want to come up with some sort of value to pay for the company. What I do is, a typical company will sell for about 15 times free cash flow. But we're looking at a 5-year average, because I believe in going long term. So since it's going over 5 years, and in fact cash flow is increasing, I pick a higher number. I pick 20. So 18.35 times 20 is $367 billion.
That's true. You did it. Wow, look at that. You got that in your head.
That's an X, because the current market cap is 400 and some.
Yeah, 460, Paul.
Now, again, that's an X. And let's go to our 8 pillars tab to show you all the work that was done for you. So, Uncle Seth, the 2 biggest issues are valuation. Yeah. I'm not as worried about the shares outstanding, ironically. I know people might be worried about that one. For this one, I'm not worried about it. And they just I think they just announced share buybacks.
Did they?
I think they did.
That one.
Yeah,
So,
you can find this under our news section in the Everything Money software.
it's somewhere in there, yes. So
Great.
guys, this software was created because we were doing these videos and everybody kept saying, Paul, you have this expensive software behind you. How do I get access to it so that I can do my own analysis of companies before I have to wait for you to make the videos? So we created the software. This software gives you everything you've seen here is on a mobile app. It gives you the stock analyzer tool, which is incredible. You're going to have real estate calculator, but you're going to get exclusive content every single day. We post 2 or 3 videos a day just for our subscribers. You can join the 6,000 other people who buy the software in our chat. It allows you to talk to them about any investments you have, because so many people feel alone. They might not have friends who look at money the same way.
Yeah.
It allows you to do all that. And this is all for only 90 cents per day. This is a no-brainer, guys. Less than a cup of coffee, you can have the software. If you're just able to increase your returns by 1 or 2% a year, it could lead to hundreds of thousands, if not millions of dollars extra in retirement. This is a no-brainer, guys. I look at this, and we have so much growth on this thing. I love it, and it's all in the palm of your hand on an app. It's incredible.
Okay, Paul, so how do people join our software and get this data in their hands?
So 2 easy ways, either everythingmoney.com or Patreon. The benefit of going to everythingmoney.com is you don't pay sales tax yet because we're not big enough. And 2, you don't get double charged in the first month like you do on Patreon. But whatever you feel comfortable with, go do. Easy access. You'll get access within minutes.
The CFO said they're buying back 10 to 15 billion over the next year, and they just bought back 3.7 billion since April.
So they're buying back shares. That's why I'm not worried about that share buyback over the last 5 years. So now, stock analyzer tool. I go here to the stock analyzer button.
Yeah, because all this mumbo jumbo, Paul, of these numbers doesn't tell me what I should be. Is 179 a good number? Because 300 used to be a good number in some people's minds. So What should we pay for this puppy?
So pick years of analysis first. I'm going to go with 10 years of analysis because it's a bigger company and I want to look long term. Number of assumptions. I usually pick 2. So here, guys, it shows us the historical numbers for revenue growth, share change, all your historical numbers. So revenue growth. Guys, it's a big company. Let's assume 15 and 25% revenue growth, low and high. Shares, low side, keeping it the same. High side, buying back 1%. Profit margin. Let's go with 19 and 22. Free cash flow margin, 19 and 22. PE. Now, PE and price to free cash flow. They're currently 20 and 14, but we want to go look at a long-term average. This is a large company. As it gets larger and larger, it's going to be harder to grow and grow, so you have to pay a lower PE. So I'm going to go with 14 and 16 for both of these, for an average of 15. And the final number, desired annual return. Guys, if you put your money into an ETF following the market, you're going to make 10% over long periods of time. So to buy an individual stock, give yourself a reason to. I put in 12.5%, plus it gives you a little margin of safety. I hit the analyze button. This is where stock price now matters, because it's going to factor in a future value divided by the future number of shares. Current price is 170.
Oh my gosh, look at that.
Guys.
Tell people what this means, Paul.
So this means that right now, you should be willing, on our low assumptions, if you believe these low assumptions, if you paid $240 for the stock, you'd make 12.5% return. On the high side, if you do the high assumptions, you could pay $688 for the stock today.
And still make money.
So what this tells me, guys, is this stock, I believe, is going to be a $1,000 stock at some point in the next 7 to 10 years. That's what I'm banking on. It's my largest position. It doesn't mean you should go out there and do it. Do your own research. A lot of questions exist about the company's financials from China. I'm mimicking Charlie Munger. I don't care what his valuation of the company is, never heard it. But Charlie Munger believes the numbers out of China, out of Alibaba, so I'm willing to believe it as well.
If you were looking to trade this stock, not a long-term hold, but trade it maybe on a daily basis, a weekly basis, you can join our handsome Mo in that Bidnas Nation, that top trading tier. Mo, what have people been doing with Alibaba?
So I've said for a while, don't go and trade this thing because from a long-term perspective or a swing trading perspective, because of the volatility that was coming with all of the news out of China. That seems to have slowed. So now I'm fine with it. So let's see what we can do over here. We do have declining volume. We have earnings reporting tomorrow, so be careful with that. So let's see what happens tomorrow. If this thing jumps up here, you're gonna have to get through this 100-day moving average. You're gonna need volume to do that. If you drop below this 25-day moving average, there could be room to fall back down to that 140 number. So you're in a tough spot. Go with what happens tomorrow on earnings. But overall, why don't we look at the long-term trend right now? It's actually looking very decent. I mean, you are coming up. This is the first time in a very, very long time.
Look at that.
Seth, let me zoom out and see the last time they were in. This was
what day was
November of 2020. That's the last time that they came down through the sweet spot. So this is your ultimate dog stock that comes down through the sweet spot and just goes sideways while the stock price declines. So this one for me, I would just wait on this thing. If this does move up into the sweet spot after earnings, it's going to go for a hell of a run. It's been a long time since it's happened, so it has a lot of energy being built up in it, especially if the volume starts flushing into the stock. So if you like this idea of trading and you've never done it before, and you want to do something from a daily perspective or a long-term perspective, the Bidnas Nation is the place to come. For $1.50 more per day, you get all of the Everything Money software, you get the mobile app, you get everything, plus you get access to me, access to the Trading Employed Trader series, Trading 101 series, and I get to teach you on a daily basis, direct access to me in the Discord. So the Bidnas Nation is where you come for trading.
Mo, my 11-year-old son Gio is asking for Baba stock for Christmas.
Is he really?
He has a couple shares, and I've been telling him, when Uncle Paul thinks this is $1,000 stock, I think he has like 15 shares, Paul. So he's hoping by the time he's 20, he'll be flossing with Baba.
So I think there's also a teaching point here about, what happened with the decline of Alibaba, especially in the recent 2 months. That is your perfect example of what you have your exuberant highs and your depressing lows as a reaction to news.
And they're both usually irrational.
Irrational. Totally irrational. To see Alibaba's stock drop that quickly from $200 a share to $138 a share in a matter of a week or two, that's totally irrational. This is that perfect example that we always talk about.
Final take on Baba, Paul. I love you.
The final take. It's my largest holding, and I'm probably going to add to it.
Yeah, we love this company. It's amazing to switch, Paul. Just maybe 10 months ago, we were so against this. You said it had to fall in half, and it certainly did. So go back. If you're interested, go back and watch our old videos on Baba. We keep updating it, and we certainly will. Paul thought that, was worried that 138 was going to be the trough, and maybe it has. Maybe it will be, Paul. We'll see. That's our take. Fondle the thumbs up. Join the community below, and we'll see you next video.